There are three factors contributing to the persistent sub-$1,900 pricing of Ether. The potential for a price trend reversal is being primarily driven by PayPal's recent announcement regarding the introduction of a stablecoin, as well as the submission of several applications for Ether exchange-traded funds (ETFs) by bullish investors. Since July 21, the price of Ether has remained confined within a narrow trading range, fluctuating between $1,800 and $1,900. The absence of significant volatility in the market has generated a feeling of doubt and distrust among investors. Even recent favorable occurrences such as the introduction of PayPal's stablecoin based on Ethereum and a notable increase in demand for exchange-traded funds (ETFs) centered around Ether. The integration of PayPal into the realm of cryptocurrencies may indicate a significant advancement towards the widespread acceptance and utilization of Ethereum. Nevertheless, this action also gives rise to apprehensions over centralization and the possible relinquishment of authority over individual assets. Simultaneously, the United States Securities and Exchange Commission has observed a notable increase in the number of applications pertaining to Ether. ETH, short for Ethereum, is a decentralized, open-source blockchain platform that enables the development. The stock market indices have experienced a decline. The amount of $1,850. Exchange-traded funds (ETFs) are increasingly being pursued by prominent asset management firms as a means to replicate the growing interest in establishing Bitcoin, BTC, ETFs. The decline in dApp deposits and active users observed in the case of ETH is a matter of worry. The Ethereum network is currently encountering challenges due to elevated gas fees, which represent the expenses associated with transactions, including those executed using smart contracts. Over the preceding 2-month period, the mean transaction fee has exceeded $4, resulting in a constrained demand for decentralized applications, dApps. A discernible decrease has been observed in the aggregate amount of deposits, commonly referred to as the total value locked, TVL, on the Ethereum network. According to Defilama, the observed reduction represents the lowest recorded TVL level in the past 3 years. Although there may have been fluctuations in this pattern throughout the previous week, the present situation continues to demonstrate a significant decrease in the number of Ether deposits. Specifically, there has been a decline from approximately 14.75 million deposits recorded 3 months ago to roughly 12.9 million deposits at present. In order to determine if there is a correlation between the decrease in Ethereum's total value locked, TVL, and a decrease in its user base, it is advisable for investors to closely observe the usage of decentralized applications, dApps. It is noteworthy that some decentralized applications, dApps, such as gaming platforms and marketplaces, do not necessitate significant deposits. The decline in the quantity of active addresses engaging with dApps is a matter of worry. Over the course of the previous month, there was a notable decline of 25% in the number of active users seen in the primary decentralized applications, dApps, operating on the Ethereum blockchain. This observation may indicate that investors are dissatisfied with the transaction fees associated with utilizing the network. Analyzing derivatives of Ether can facilitate the determination of whether the $1,800 threshold can indeed serve as a dependable support level, contingent upon the positioning of Ethereum investors. The measures related to derivatives indicate a state of equilibrium in the demand between bullish and bearish market participants. Quarterly futures contracts for Ether have gained significant popularity among large investors, commonly referred to as whales, as well as arbitrage desks. Nevertheless, it is worth noting that these contractual agreements with fixed durations of 1 month generally exhibit a slightly higher value compared to the immediate settlement markets. This suggests that sellers are demanding a higher price in exchange for postponing the settlement process. Consequently, it is expected that Ethereum (ETH) futures contracts in robust markets will exhibit a yearly premium ranging from 5 to 10%. This occurrence, referred to as contango, is not exclusive to cryptocurrency markets. Since July 16, experienced traders in the Ether market have been unable to adopt a bullish attitude, as indicated by the futures premium, also known as the basis indicator. The existing level of 5% is situated at the cusp of a neutral to bearish threshold, suggesting a condition of balance in demand between leveraged long and short positions. In a pertinent development, the NFT project Y00TS has made the decision to relinquish a $3 million grant. While concurrently transitioning from the Polygon blockchain to the Ethereum blockchain. The introduction of Coinbase Space Network on August 9 has the potential to facilitate Ether's endeavor to exceed the price threshold of $1,900. Multiple development teams operating within the ecosystem have made public their own contributions to the Base network, which now include a variant of the decentralized exchange known as Uniswap. The bullish outlook for Ether is driven by the anticipated approval of an exchange-traded fund, ETF, and the significant user base provided by PayPal stablecoin. However, the network faces competition from established smart contract platforms and emerging entrants with enormous resources. The aforementioned situation provides a measure of uncertainty regarding the resilience of the support level at $1,800. Bitcoin price prediction: is it time to buy now that the halving event in 2024 is making people feel bullish? At the moment, the BTC/USD is down by almost 0.5%, and its value is $29,400. As the cryptocurrency market deals with this change, the price of Bitcoin is under more pressure as people wait for the Bitcoin halving event in 2024 and a key decision from the U.S. Securities and Exchange Commission, SEC, about an ETF application. Also, when the U.S. inflation data comes out, it adds another layer of doubt to the market's path. In this context, we look at the things that affect Bitcoin's current state and its future. This will happen in 2024. The next Bitcoin halving event will happen on April 26, 2024, and the block reward will drop to 3.125 BTC. This date was calculated based on recent estimates. This splitting highlights a key part of Bitcoin's monetary strategy, which is to control inflation and make Bitcoins harder to get, which drives long-term value. As each halving event reduces the number of new Bitcoins made per block, the supply of the cryptocurrency gets tighter. This is similar to how things like gold become less valuable over time. In the past, when supply goes down and demand goes up, prices have a chance of going up. In the end, Bitcoin's halving strengthens its unique position by limiting the number of coins that can be made to 21 million. This is different from traditional paper currencies, which are prone to inflation.